This episode of Analysis in Chains is brought to you by our sponsor, Bankera. Bankera is building a digital bank for the blockchain era, and their token sale is on until the end of February. You can find out more when you visit them at www.bankera.com. And now for our show.
This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Welcome to Analysis in Chains, everybody. Happy Monday. It's Nathan and Neal. Hi, Neal.
Hey, Nathan. How's it going? What part of the world are you at today?
Today I'm in the UK. Is my sound quality okay? I'm recording on a friend's laptop.
It's okay. It's okay. What's he using? Some prehistoric. A MacBook. Oh, it's prehistoric.
It's an old MacBook. It's an old, I think it's a stone tablet here.
A stone tablet. Yeah, it sounds like a stone tablet.
When dinosaurs roamed the earth and computers were abacuses. And the internet was smoke signals.
Yeah.
No, it's cool. I've been on traveling the past couple of days. I'm going to be in the UK until mid next week, meeting with all sorts of people about my blockchain projects, about analysis of chains, about MindSpider, and then I'm heading back and full tilt boogie when I get back. So.
And
no rest for the year. And
are they saying much about the price? Are they getting excited, or are they saying what we hear all the time, that Bitcoin is crashing?
Well, it's funny. I've been meeting with bigger companies, and they're not sure what to make of it. Like, people are still curious, but I think most people, even in the big organizations, are not sure. But I've been looking, and I am, I guess, not surprised, but glad to see the Bitcoin price going back up.
Yeah, like, things have really taken off recently. I think it was only 2 weeks ago that maybe we were saying that this, we were kind of depressed that we lost our shirt, and it felt like it was the end of crypto, and all the news channels were saying this was it was crashing, and all of these geniuses were saying, told you so, it was a big bubble, it was just a matter of time. And now we're in this weird situation where the hype cycle is back on again, and everyone is getting frothy around the mouth because they think that Bitcoin is going to go to the moon this year.
And I'm not surprised. I'm not surprised that people are excited. I'm also not surprised that people are expecting it to go up, and I'm also expecting it to go up, to be honest. But it's because I believe in the technology, but I also believe in people's hype, and that people want to be part of something when it's major. And it's good to see that it didn't lose too much steam. I also was worried before. And then I talked to a friend of mine who is, he's been in crypto a lot longer than I have. And I said, do you think that this is the end of ICOs because of the Bitcoin price low? And he laughed at me. He's like, maybe a lot of the retail investors will drop out, or the people that, put in one Ether and jumped into Coinbase in the days where there was 100,000 new people a day. Yeah, maybe they'll drop out. But the old school crypto whales are still in there, and they're still investing. And all of the people that they invested in the first round projects and the second round projects have piles of crypto, and they're investing, and they believe in it. And so maybe it'll shift. Maybe it'll shift away from, retail crowd sales to more private sales, but it's not going away.
Yeah, and I'm not surprised to hear someone, offer that type of analysis, because when we think of bubbles, we think of market bubbles. A lot of these market bubbles are on Wall Street or in institutional investing tools. So the thing is that when people look back at their like when you look back at the dot-com bubble and other bubbles, they're not really comparing apples to apples when they compare it to crypto. Crypto is kind of different because we have a lot of retail investors come in from a very early stage. And as you said, a lot of them have become whales and are very committed to the process. And crypto is not subject to quarterly meetings, to earnings calls, EPS metrics. And so while this scares people because they don't have this feedback loop to help them understand how successful crypto is, it means that it's not threatened, or it cannot have a crash like a dot-com crash because it's not subject to these metrics and no one is evaluating them on these metrics. And I think the best way to value crypto is really down to how Tom Lee from Fundstat really summed up his analysis. So Tom Lee, if you don't know by now, he was a Wall Street analyst and now has his own analysis investing company called Fundstat. And his analysis on TV is very, very good. It's probably some of the best I've seen in terms of forecasting anyway. And how he evaluates crypto is really based on network effects. So you believe in a type of crypto and then you tell a friend and they tell two friends and then it just it grows and grows to an exponential level as opposed to a linear level. And that's why we have these huge hype cycles. And I think the best way to understand crypto is to look at its network, its community. And the more healthy that becomes, I think the more valuable the crypto comes. It's very hard to know where the end game is with crypto, but it's a growing entity, similar to, say, social media. And I think that's the best industry to really compare crypto to. When we look back on Facebook and Bebo and MySpace, they were growing at a fast rate because of network effects. And I remember when they were very successful, and before Facebook had an IPO, people were saying, like, how do you value this company? It's just people talking to each other. In the end, some form of revenue model was established, and now they're very successful companies. And I think we will see the same with crypto companies. At the moment, it may not make a lot of sense, but eventually, some revenue models will emerge, become sustainable, and then the whole crypto sphere will become a very healthy and mature industry, in my view.
What's interesting to me, I mean, we've done so many of these interviews in the past couple of months just to try and meet new people in the space, right? And what we've heard time and time again is that there are revenue models for all of them, at least the ones that we've talked to. I mean, there's a bunch of stuff out there that doesn't have a revenue model, and I would classify most of them in the garbage category. But when you're talking about like a real project that has strong backers behind it and legitimate business partners and prominent investors and prominent advisors, almost all of them have a revenue model, a positive revenue model. And you need it. You need some sort of token economics that includes an influx of value into the system as well as a disbursement. Otherwise, the whole system will lose steam and crash.
So, just extending on to that, when I look at ICOs, there's a lot out there that get me excited because I'm able to see that. I'm able to see, okay, they're going to use blockchain because they're like a trading platform, and this trading platform has a lot of potential and will potentially, get a lot of new subscribers, a lot of sellers in the future, and therefore I can see it grow, and therefore I can see the value in buying your token. So, but one thing that's very hard to evaluate is actually Bitcoin and Ethereum. A lot of these sort of mega coins or mega cryptos that we see all the time at the top of coin market cap. And these are very, very speculative and very, very hard to determine their value because there is no feedback loop because they're not really companies. But Bitcoin is almost like a currency or a form of crypto asset. And one thing we see a lot this week is that now that crypto is back up to 10K, people are saying it's going to be 50K by the end of the year. People are like, this hype cycle is back on again. And people, I would say, should be cautious in getting caught up in the hype cycle. Yes, I'm very excited again. My hope is my hope is back for blockchain and how it's going to be, take over the world and be in this incredible industry that's going to really revolutionize things. But even I'm quite cautious when I hear people talk about 50K. In terms of where price is going, I think Tom Lee said it best when he was saying that, potentially going to 20K and settling at 25K near the end of the year. So, and the thing is, Tom Lee based this purely on network effects, people telling people about Bitcoin. And that's the big assumption about price. But when you see people say 50K, I would say people, relax. Don't throw your house in, don't throw your life savings into Bitcoin, because these things are still very hard to evaluate. ICOs are much easier, in terms of looking at their revenue models, easier to evaluate. But when you hear people talk about 50K Bitcoin, really do your own due diligence and try to understand where they're coming from. Bitcoin popularity, I'm sure, is going to grow over the course of a year. Ellen, on her show, she's a very famous TV host, even talked about Bitcoin. Yeah. Ellen talked about Bitcoin. I'm sure that's going to, again, impact the network effect of Bitcoin. It's going to potentially grow in price. But, estimating 50K, 100K that people throw about, I would urge people to do their own due diligence, because these things are very hard to understand.
Yes, I'm sort of two minds of this, Neil. I mean, on the one hand, the last time we made a price prediction, in November, and we said maybe it would reach 10K by the end of the year. And it reached 10K by the end of the week and reached 20K by the end of the year. And so I do understand the need for caution. But when we're talking about network effects, people tend to build on each other's hype. And and I could see it growing much faster than we realize, especially if there is a slew of new ICOs that come out over the summer. And this is something that's been rattling around in my brain, is that there are external factors that really impact the price of Bitcoin and Ether and the number of ICOs in ways that technical analysis doesn't deal with well. And those things are regulations, are things like very popular mainstream people, Ellen DeGeneres or whatever, talking about crypto. Things like huge scandals that nobody knew about coming to light. For example, the Mt. Gox, or more recently the BitConnect scams, or Facebook saying we're not going to allow ICOs to be promoted anymore. Like, all of these things have enormous impacts on crypto pricing and adoption and network effects that in both positive and negative, that are hard to foresee. And I guess I'm hopeful. I'm hopeful because I do know that this technology, underneath everything, this technology is transformative. It is ultimately a way of transmitting value electronically without a trusted third party. It is brilliant. It's like the internet was in the 90s. I mean, how many websites and companies from the early into mid 90s are still around? Well, not very many. And because they all had the same business model of, putting up that banner ad at the top and saying, we're somehow going to make money, like get a lot of users, ... profit. But yet, underneath all of that hype and these, multi-million-dollar valuations for garbage websites, there was a core technology that fundamentally changed the way we live our lives. And it was after the crash that, the whole thing was rebuilt, and we got the Googles and the Facebooks and the things that became public utilities, essentially. And we're going to see the true value of crypto come out, whether or not there's another crypto winter or or what have you. But I mean, this is why I'm still hopeful, and at the same time could imagine those crazy prices and a network effect far beyond uh, the conservative estimates. That said, you're right. Don't bet your house on it. It's the friggin' single riskiest investment you can ever make. But there, I said it.
Yeah, we're not financial advisors,
Yeah,
and I don't know.
what's the phrase? Not financial advisors, information and entertainment only. Hello.
Yeah, but I don't know who is. Like, I would love to meet the first person who says in a podcast or YouTube, "I am actually a financial advisor for crypto, and everything I say is valid and legal."
I think the reason they do that, same the reason the lawyer does, like it's always personalized, right? If you're actually giving financial advice, like if you're talking on a radio show, nobody would be willing to give financial advice over a radio show because they don't know your personal situation.
Exactly, exactly. But going back to your point, I think you're completely right about the risks of technical analysis. A lot of these people who say that Bitcoin will go to 50K by the end of the year have all these graphs on Twitter proving why it's going to go to 50K. A lot of it is based on charts that use logarithmic views. And the reason why you have to do that with crypto is because it is growing at an exponential scale. And that exponential scale is because of network effects. But when they do these logarithmic views, it's like a straight line in growth. And when you use that straight line over time, it shows that 50K by the end of December. This is a very generalistic form of technical analysis, and it can be dangerous assumption as well, because some people think, oh, free money. I'm just going to put 100K on this and it's going to be worth 500,000 by the end of the year. People need to be very, very cautious. And as you rightfully said, the external factors are very strong, whether it be governments doing, legal crackdowns, for example. For all we know, there could be a fundamental flaw in one blockchain, crypto, and then it takes down the rest of them. And the one thing that keeps coming back and haunting blockchain is scalability. If Bitcoin goes up to 50K, well, what will the fees be? What will the transaction time be? We saw this same issue when it hit 20K. So again, I assume maybe this is one thing that's incorporated into Fundstats' assumption of 20K mid-year and 25K end of year is potentially because scalability will rear its head come mid-year. So these are the things that are still out there and have not been resolved since I last hit 20K, and people need to be very mindful of this.
One thing I want to come back to, a point you made earlier of how important it is to have money coming in and money going out like a business into a crypto project, and you don't really see that with Bitcoin or Ethereum or like the mega coins. I kind of wanted to challenge that because the reality, like when we're talking about things that play into the price, the crypto economics are exceptionally important. You need influxes of value and outflows, and you need some sort of business model, a way to exchange and interact with off-chain, with real-world goods. And even though neither Bitcoin or Ethereum are exactly like another crypto project that might be a more traditional business, there is that influx and outflow of value in both. With Bitcoin, the influx of value happens with the money that people pay for electricity to mine the Bitcoin. And it's not centralized, it's distributed. But then there's also an influx of value when people pay money to the people who mined the Bitcoin to receive it. And so that's where it comes in. And then the outflow of value, or maybe the outflow of value is the people paying the money to the electricity, and the influx of value is people converting fiat to actually buy the Bitcoins that were generated for that electricity. And you have something similar going on with Ethereum, but you also have a transfer of value in the fees that miners take, and in people purchasing the ether in order to either transfer value or to or to create their own projects. And so they would need to pay for Ether in order to pay for the transfer fees for their own projects. And so you do have business models there, even though it is distributed.
And it's funny that you talked about mining, because mining, I often ask myself, is it viable long term? Because we keep seeing more and more stories in the news about how miners are taking up way too much energy in various countries. I believe it was in Iceland. The miners were creating a lot of havoc on energy prices over there. And recently, there's been an influx of miners coming to Canada. And the news has been that while Quebec, where I'm from, were trying to attract a lot of these miners because they had excess hydroelectricity that was not being used, what's happening now is that they've realized how much demand these miners actually have on the infrastructure, and have now increased, or are looking to increase, the price of electricity to these guys because they realize it's so energy intensive. So for a while, I was kind of dismissing this as a problem, but now I'm starting to realize, like, for a lot of these mining coins, it really is a big threat. And proof of stake, while we hear more about it because Ethereum is looking to roll it out this year, it in itself is not the perfect solution. And so this is the other thing people need to keep in mind while they invest in crypto, that while everyone is super hyped and super pumped, and yes, the future for blockchain looks very promising, there are still challenges ahead. Mining is going to face more challenges in the future, especially as it becomes more energy intensive. And Ethereum, can it make proof of stake work? Because there is a huge risk that their algorithm will make the rich richer, because if you have a lot of Ether to stake, and every time a new coin is mined, well, then you get the majority share of that coin. So it just becomes rich getting richer type of situation.
Yeah.
So these are the big problems that people need to be mindful of while crypto evolves and becomes more expensive.
Yeah, I mean, there's never going to be a perfect solution, and it's all about trade-offs. I mean, I like what Zilliqa's doing, mainly because I talked to them and it sounded interesting, where they're maintaining proof of work, but with sharding and with some of the other techniques that people have been talking about for a while in various papers that they brought together. And I know that there are other protocols out there that are competing, that are also doing similar things, where it's like you do a proof of work that that maybe not for each block, but you do a proof of work that validates that computers are only one computer, and then they're trusted for a series of blocks, or stuff like that. With proof of stake, yeah, you do have a big question mark around the economy, and it's as of yet untested. Are the people who are staking the money going to just the ether just going to grow in value at the expense of everyone else? Are you creating an oligarchy? No one knows. Maybe that's the fear. Probably.
Yeah, yeah, but these are the challenges in 2018. So before people get too caught up in the hype, have these things at the back of your mind. Yes, things are looking good right now today, but there's still many challenges ahead. And yeah, we're all bullish on blockchain and the future that it has in store. But in terms of these prices, try not to get caught up in the whole thing, and do your due diligence.
I remember a few weeks ago now, or maybe a month ago or whatever, when Josh Shigala was at our live event, and we recorded that. One of the things that got brought up was the power consumption of the Bitcoin network. It was over 200 kilowatt hours per transaction. How is that sustainable? And it is a big problem, but it was interesting, his response. He asked, how much does a normal bank transaction cost in energy? And that's not something anybody knows, but it's a lot. They've got people driving into work. They've got buildings with lights on. They've got servers and server farms in various countries that have to talk to each other, and phone systems and all sorts of things that are hard to add in and calculate. Are they comparable? We don't know. Um, what's interesting is that we can actually calculate Bitcoin's or estimate Bitcoin's energy usage.
I think one thing that's different there is that in that environment of, say, your PayPals, your Visas, or your banks, is that they're not competing in terms of transactions. In the mining world, there's a big competition to get the coins, to mine them quicker than others. That's the incentive, and therefore more energy is required the more, say, hash power that you have. And so the thing is that it's a problem now, but if you think about it, over time there's going to be less Bitcoins to actually win. And the incentive should be there to do transactions, to confirm transactions. And maybe that type of model would mean there'd be less energy. It'd be a lot more like a banking system because it's just a case of processing. It's not a case of competing to get to that next Bitcoin. But the thing is that we're not hearing this discussion happening at the moment with the miners or with the developers, and it's going to have to happen because the energy consumption is not sustainable as it is. But people are a lot more consumed with scalability at the moment as opposed to the mining. So unfortunately, it's on the back burner for the time being.
I remember seeing a meme somewhere. Someone had said, let's put on our conspiracy theory hats. If we really wanted to move the world to green energy, what we could do is we could create an incentivized Bitcoin system that consumes massive amounts of power, incentivizing people to build piles of solar panels, and then have a big crash, and then we have piles of solar panels everywhere producing all the energy we'd ever need.
Yeah, I'd like to see that happen.
Maybe without crashing Bitcoin.
Yeah.
So, Neal, I wanted to tell you just very quickly a couple of updates about what I've been going through the past few days. It's been wild. So we had our third Berlin live meetup. We had about 60 people there. We had two special guests. We had Nadia Benes and David Doppel. Nadia is from Gnosis. David is from Demand Films. Both were high-profile people. We spoke to the room, 60 people. We live streamed the event. It was pretty epic. I think it was the best event we've done so far. Yeah,
fantastic.
And on Monday we're doing the next one, which is in London, and on Thursday we've got one in San Francisco. And so the London one is going to be at Runway East in London. I'm going to be there. It's going to be me talking about blockchain. It's more of a beginners meetup, and I'll talk about MindSpider, my startup as well. And then on Thursday in San Francisco, we've got someone from Project Shivome, which is basically putting genomic data, like incentivizing people to put their genome on blockchain in order to get medical research. It's fascinating stuff. I'm not going to be at the one in San Francisco. We've got one of our local leaders there, one of our listeners. His name is Frank. Frank will be leading that. The cost for the space is a little more there, so you actually have to have a ticket for the San Francisco one. So it'll be exciting. Speaking of events, I'm going to be at the Crypto Assets Conference. I've mentioned this a few times, but it looks pretty exciting. They've got 55 speakers, including me. I get to rub shoulders with the big boys. They've got someone from Kraken, someone from Ripple. They've got just 55 speakers, essentially. They've got old economy like the Deutsche Bundesbank and BaFin, and they've got Commerzbank, and they've got new guys. So from Spherity, and Josh Shigala is going to be there from Voltoro. It's nuts. It's going to be awesome. Yeah. So anyway, that's the updates, and I wanted to quick tell you a story of what happened to me yesterday. Yeah. So basically, I'm In the UK because I for the next couple of days to do the London event, but also to see family and to meet people to help my business. And I actually got to go and speak to Deutsche Bank yesterday. That was really amazing. So if you remember, Neal, I was on TV back in November talking about MindSpider and Bitcoin price. I guess it was December actually on CNBC. You remember that?
Yeah, yeah. I've
Yeah.
watched it a million
Oh, okay. I
times,
know you must.
Nathan. Like that
Okay.
special
Yeah.
clip.
What would I do without you? But anyway, you remember that there was a guy next to me I said something about the Bitcoin price. The host challenged me, and then the guy next to me sort of defended me. Well, he's
Yeah, yeah.
a senior guy from Deutsche Bank, and he invited me to go and speak to a group of his colleagues. We had a room full of 12 people, and I asked them like, "How many of you know about blockchain?" And not many did, actually. It was a fairly new concept. And so I spent an hour telling them about how blockchain worked, how the hash algorithm worked, why it works, how it transfers value, how it can be disruptive, because you can create unique digital items. And it was really awesome session. Um, I think what that showed me is that it's still really early days, and even the banks who are going to be some of the most affected institutions by this blockchain revolution don't quite have a handle on it yet. And it'll be, and I'm glad that I was able to be there to sort of help get them familiar with the concepts.
Yeah, and that's the thing is that I feel that there's a huge assumption surrounding blockchain, which is it's going through this crazy hype cycle, just like the dot com, and it's going to crash, just like the dot com, and then we'll get interested in blockchain. That's a very
It is.
risky strategy because the thing is things are developing at such a rapid pace, and yeah, every week there's new news about a new business concept or a new institution getting involved. And the thing is that if there is no crash, well, then you kind of really are left behind. And I think this assumption of a crash is is something that people need to test and evaluate, because we're looking at Bitcoin that crashed, effectively dropped from 20,000 to nearly $6,000, and a lot of crypto dropped 90%. And people call this is the great crash. But if it ends up recovering by mid-year, well then what is this crash that people are waiting for? And yes, we could have this cycle of boom crash multiple times, uh, but over a very short period of time. So if it keeps happening, what are you waiting for? Just start now is my advice to anyone that's standing on the sidelines looking to get involved. Because if you wait too long, this world could end up passing you by way too
That's
quickly.
right. And if you're in a big company and have way too much money to spend, and you don't want to miss out, then Neal and Nathan are the guys that you want to come and educate you on crypto.
Yeah, exactly.
Oh man. Okay, Neal. So we'll see. We'll see. Are you going to join in the live stream from London? We're going to try and live stream that one.
Oh yeah, for sure. Send on the link. I think last time it was sent out by tweet. Make sure it's tweeted again. And yeah, I cannot wait to follow the show. And I often listen to the recordings afterwards. And I think they've been fantastic to date. I really encourage everyone to follow in on the show. And I
Yeah.
hope you enjoy it as
All
well.
right, Neal. You have a good week. Keep on hashing.
You too. Keep on hashing. Bye.